Time for business. Kate Moody joins us less than 2 weeks after he was sworn into office. The US President, Joe Biden, is facing pushback over a key piece of legislation, his coronavirus stimulus plan. Kate.
Yeah, he's meeting with a group of Republican senators, Mark, who are asking him to scale back that $1.9 trillion stimulus proposal. The group of moderates are led by Susan Collins of Maine. They're putting forward a plan that's worth about a third of the president's own proposal. Biden has vowed to seek consensus on a bipartisan deal, but it's not clear how much he'll be willing or forced to compromise, especially with a thin majority in both houses of Congress. The $600 billion Republican offer excludes aid to state and local governments and lowers the amount of stimulus checks from $1,400 to $1,000 while raising the threshold for eligibility for them. Biden and his team insist that big spending is key to protecting American households and businesses and rebuilding the American economy. Separately, the nonpartisan Congressional Budget Office has said it expected GDP to reach its pre-pandemic level by the end of this year, even without Biden's stimulus spending. But it warned the labor market would take years to recover. Well, the Biden administration has announced over $230 million in funding to speed up the production of an at-home COVID test kit. The Australia-based company Ellume has developed a kit similar to the now ubiquitous nose swab, but one that can be performed by yourself at home. A top Biden advisor said the ability to test, trace, and treat is a, quote, linchpin of the new national strategy to control the spread of the virus.
These are over-the-counter, self-performed test kits that can detect COVID with roughly 95% accuracy within 15 minutes. Thanks to this contract, they'll be able to scale their production to manufacture more than 19 million test kits per month by the end of this year.
Well, after last week's market turmoil linked to GameStop shares, another group of activist investors seem to have zeroed in on the commodities market. The trading price of silver has popped as much as 13% today, topping $30 briefly. That's its highest level in over a decade. Last week, amateur traders were pouring money into shares of the struggling video game store chain GameStop, hoping to squeeze big hedge funds who had bet against the company's fortunes. Some of them have been taking to social media to say they are not involved in today's silver moves. It has, though, been billed as a David and Goliath market battle, pitting small investors against Wall Street giants. Over the weekend, it even sparked some demonstrations reminiscent of the Occupy Wall Street movement, partly because brokerage apps like Robinhood were restricting GameStop trades. That brings us to our look at the rest of the day's trading action now. GameStop shares did fall around 30% today. Trade was halted briefly earlier in the session. They had jumped 700% last week. Wall Street recovering from a bit of a panic that led to its worst week since October, closing higher there. The Dow Jones up about 220 points, the Nasdaq over 2.5% at the closing bell. The major European indices closed higher as well. The CAC 40 and DAX were each up over 1%. New data showed Eurozone unemployment held steady at 8.3% in December. That's still over 13.6 million people out of a job. They were the jewels of British high streets, and now they're heading online only. The internet giant ASOS has bought the Topshop, Topman, and Miss Selfridge brands from the collapsed Arcadia Group. It's part of a growing trend that's reshaping the retail world, as Ellen Gainsford reports.
Throwing a lifeline to the former high street giant, ASOS has inked a deal to take over Topshop. Once a symbol of British retail success, Topshop fell into administration in November last year, along with the rest of Philip Green's Arcadia Group and its 13,000 employees. It was a dramatic fall from grace for the retail mogul. This Monday, ASOS has announced it's buying Topshop, Topman, Miss Selfridge and activewear brand HIT in a deal worth more than €373 million.
The acquisition of these iconic British brands is a hugely exciting moment for ASOS and our customers and will help accelerate our multi-brand platform strategy.
But ASOS hasn't agreed to buy any of the brand's 70 stores, meaning around 2,500 jobs will be cut. Online retailer Boohoo is in talks to buy 3 other Arcadia brands, Dorothy Perkins, Wallace and Burton, also discarding their shops. It sealed a similar deal for the department store Debenhams last week, covering the brand and website, but not its shops, a loss of 12,000 employees. Arcadia's collapse has been among the biggest corporate failures of the coronavirus pandemic so far. Lockdowns have crushed an already struggling high street, accelerating the move towards internet shopping. Nearly 180,000 retail jobs were lost last year. Meanwhile, online retailers are booming and picking the bones.
The end of an era, Mark, for shoppers there in the UK.
Indeed. Kate, thank you very much indeed. The whole effect of this pandemic on so many aspects of business is massive. Kate, keep across all developments for us. Thank you very much indeed.